Good morning, Forex traders, and welcome to a new episode of the weekly Forex Outlook. This is your host, Sharif Bhat, founder of TrendFollowingFormula.com. In the weekly Outlook, we will go through the weekly calendar to get a clear vision for the financial week's terrain. We will then take a look at markets structure, viewing price action and correlation across currencies, commodities, and stocks. Finally, we will conclude with TFF's bullish and bearish list for explosive markets that we can easily consume with minimum confrontation and the maximum profit. So with no further ado, let's listen to this week's Outlook. Good morning, Forex traders. This is Sharif Bhat, founder of Trend Following Formula. Today is Friday, the 17th of February 2017, and this is 9 a.m. GMT. Excuse me. The Trend Following Formula, as the name may imply, our job is actually to look for trending markets and to trade these trending markets. We don't like sideways. When we overanalyze the market, when we start to think two times about what we see, we just ignore that market. If you want to know more about how we trade the trend, or why do we usually choose to trade with the direction of the trend, please click on the description down below. You will find a little course describing everything we do in relation to the trend and why do we certainly prefer to trade in the direction of the trend. For now, let's jump into the calendar to view what we have for today. Today is Friday. As we see, there are any news, so what you would expect is some sort of a continuation day for whatever happened before. We might have some sort of sideway till the traders get into the 9 a.m. European session, so you will see some sort of continuation on the euro. That's what we might expect. When Americans will hit in, you might actually see as well some sort of continuation on the dollar index. If we move into the chart, starting with the DAX, DXY, we had I presume that the chart is not available for a second. Yes. Brilliant. This is the chart here. This is the dollar index. We mentioned that for a week now that the dollar index have been in this down channel, creating lower lows and lower highs, and then it just broke up that previous high. And by doing this, we start to enter into uncertainty area, which we don't know really what is going to happen. Before we were actually selling the US dollar. That means we were buying gold, we were buying euro dollar, we were buying USD, we were selling actually USDCHF. But since the market have broke that previous high, there is uncertainty, because what's happening now is a potential for all reversal or sideways movement. In the sideways movement, it's very hard to define who is the winner, bulls or bears. It's very hard. That's why market tend to become volatile, and the prediction for the direction is really hard. Even picking tops or lows is as well as high, because nothing has been defined. The market went in a very short-term uptrend, which actually was very hard to define as well until it happened. So after the fact, we see that there was an uptrend here. Then we met the 101 area, which actually reversed the market back. The market have created two bars and reversed about what it took to create in 1, 2, 3, 1, 2, 3, 4, 4.5 days, what it took to create in 4.5 days, it just reversed in 2 days. That means that there is some sort of down movement, stronger down movement now. So I would not continue. I'm continuing not recommending trading the US dollar index and whatever currency related to that, whatever cross related to this. However, if you would certainly have to get into this market, because many of the traders, as we mentioned before, they marry their the pair that they trade on. So if somebody's trading the US dollar, usually they wake up in early morning searching for trades in the US dollar. If you are that type, I would recommend you to sell the US dollar index, which means I recommend you to buy the euro dollar. So if we look deeper a little bit to define the structure on the lower time frame, we will have that sort of movement, a very strong move down, and then there's some sort of corrective move. And as you see, the market, if we just pull that line chart, it's very trusty line chart. As you see, the market had the area which is 106.65. that area have acted as resistance for a few bars, and then now it's actually acting as a support. Sorry, it acted as resistance, then 1, 2, then third have been broken, and it acted as a support. It have been broken, and now it's acting as resistance again. So potentially a continuation to 99.97 is actually a higher potential in that pair. In the US dollar index. If we move forward to have a look on the euro dollar, for example, this is the euro dollar. If we will just pull the daily candlestick chart, as you see, it's a typical story as what we saw in the US dollar. However, it's a mirrored typical, it's exact mirror of the US dollar index. We have been in this uptrending channel, and then we broke it. We broke even a previous low, which actually signify a potential down move, and this happened actually, and we met a support. That support acted as a support for the market to the upside. It was really hard as well to define if this gonna act as a support or not. Even if we were able to say yes in previous videos, look at the left. Anyway, as long as we broke that previous uptrend by that sort of move, we enter into this uncertain territory, which implies that yes, we might have a sideways movement or potential reversal. And because this haven't been really a very long uptrend, we couldn't say that the reversal is gonna be down. That's gonna be basically a sideways area. So as we mentioned in the dollar index, we don't recommend yet to trade the euro dollar. However, if you are that trader that actually marries the pair that he really trades, he wake up every day, he wanna just trade that pair, we would recommend you to buy it. We would recommend you to buy the euro dollar, and potential target up to 1.07 is in the way. We might actually see something like that around that support area, and then a rally. This is what we might expect. However, as I said, we don't really very much want to trade that market because it doesn't carry a higher certainty level. The probability is probability of success, our probability of the prediction is very, very low. If we move, that's in relation to the US dollar. If we move to another market, the USD the USD actually, it was the only market which is connected to the US dollar which actually didn't show significant weakness, significant strength when it came to the trend, the previous trend. It haven't broke previous trend. As you see, it's actually a series of lower lows and lower highs. It's very, very accurate. It haven't even breached with the previous move. That means that it's still in a downtrend, and this market is actually a very sellable market. And we mentioned yesterday, we mentioned 2 days ago as well, that we are still bearish on that market and we would like to keep selling it. So that shooting star, I just increase that drawing a little bit. That shooting star on the US dollar yen was itself an entry point for us. We entered here and we recommended the entry. If you entered on the next day, that's fine. If you would like to enter on a breakdown from that area here, 113, I'll put that in on a smaller time frame. Let's move to the 4 hours. As I mentioned, if we will have a formation here which is like a flag, let's say, put it even on 3 hours, just see more candles. As you see, yes, that sort of formation, if you will have something like this, you see that's a downtrend, this is that's a support area. If we will have something like this and then we move it up, it's a sell. Hopefully we will have a breakdown like this. That's in relation to the US dollar yen. British pound. Many people are still trading the British pound recently. There are people who have these strategies that are connected particularly to a certain market. So the British pound for me is a very gambly. It's very unpredictable market. As you see, there is no trend, nothing. I cannot say if it's going up or going down. Some traders are trading the news on that kind of market. However, I don't believe that this is really the best thing that you should do to really succeed in trading. You need a more predictable market, and the only way to define a predictable market is actually through understanding the previous trend, because usually trends continue, and if you trade in the direction of the trend, usually you get hundreds and hundreds of pips. USDCHF is the same story. However, this USDCHF did actually break a previous high, so now it's uncertain territory for us. However, because it's following the US dollar, if you really insist to trade the US dollar, so it's going to be short. The USDCAD is actually in candles because of the oil. We don't like really to trade that market. To really have confirmation, we will need to move very quickly to TFF to see traders, banks positions, how the banks are viewing the market now. As we may see that the EURUSD banks are buying, banks are very, very bullish on the EURUSD. As you see here, yeah, that's here. Okay, so that confirms that our point of view. So if you really insist to trade the EURUSD, it's gonna be actually on the buy side. USD, actually USD yen. I cannot see it here. Oh yeah, USD yen is bearish, so that confirms our point of view as well. And we spoke about the USDJPY. Yes, it's a strong bearish. So this is very interesting. These are the banks, and if you would like to really trade this market, it's going to be on the short side. If we will move very quickly toward gold, you will find that, as we mentioned through the week, that gold is passing through that sideways kind of area. Move to the chart. Market is moving in that sideways kind of area, and we mentioned by the beginning of the week that we are bullish on that market 4 hours chart, and the reason was basically is that line of support. It was very obvious. It just resisted the market once, resisted the market 2, resisted the market 3. When it broke up, supported the market 1, supported the market 2, supported the market 3rd time. So we actually mentioned that we are looking for buys above around the 1220 area upward, and we would expect actually a higher high. Maybe it's not really the best place to place a buy now because the market just moved, and as you see, it seems like a sideways area. It seems like a sideways area. Okay, sometimes it's really hard to pick these tools. Yes, yes, that's the support level, which become the resistance level, which became support, and this is another level. Okay, the market have moved this way, and it's doing what it does here. So that level, which is 1244, is becoming a resistance area, so that may actually result in a such move inside that kind of sideways movement flag pattern. What we need to see is what we need to do is a buy from 1220 if this is gonna happen, or a buy above 1250. 1250 is gonna be a good breakout, reaching up to the 1300 level. So if you bought actually from the 1240, we mentioned that the 1220, we mentioned that the 1244 is going to be a potential place for your first take profit. This is in relation to gold. But anyway, as a summary, gold, as I mentioned, it's up in an uptrend and you need to be bullish on. Now finally we come to the sweet spot, the part that I really enjoy and I have been talking about for about like a month now or so. The SP500. SP500 is in a very good uptrend. It's very easy to define it. That's a good uptrend. This is actually what we looking for as trend following formula. As you noticed, we were actually polishing every kind of currency, and we always said that if you insist to enter into that certain currency, okay, the direction is like this, so and so. But in SP500, what we want you to do is just to scan the market, just look for anything similar to this on the stocks listed under the SP500 and just buy. This is an uptrend. It's very strong on the 4 hours. As you see, we have a potential correction happening, and that correction might actually lead to a break on the up side. And the reason we say that the correction might break onto the upside is the previous move, which is an up trending move. If we try to really pick some markets, we actually picked Apple. Computers, as you see, it's a very strong uptrend on the 4 hours, actually on the daily as well. That which is happening here could be abandoned child kind of formation, but we don't care about that because this is an uptrend. What we need to see is a break above the 136. This is an all-time high in Apple. So if anybody say that Apple is in a bad shape, no, it is not. It's really in a good shape. So if we will see any movement like this, we need to buy and continue up. Somebody was asking me actually in the comments, is this gonna continue forever? Because I'm always recommending buying Apple. Certainly it's not. The only one thing that is gonna define if this is gonna continue or not is us losing money on that market. And this is the rule. You need to understand that for traders to know that the market that the trend have finished is to lose money on it. Tesla is actually moving down very strongly from the previous high. Are we gonna really continue buying that market? I don't really think so for the moment. However, we didn't break a previous low, but that kind of reaction makes us really question Tesla, that kind of reaction, because I want to show you this reaction on previous. I want to show you this reaction on previous trading sessions. You see this nice uptrend when it just rallied. Once we had that very strong reaction, the market actually started to go in a downtrend. So I'm not gonna say that the market is reversing and I'm gonna short Tesla. Never. I'm not gonna do this. I'm going to basically watch the market closely. I'm not very keen now to buy on Tesla. In the previous days and weeks, we were just entering, buying, entering, buying, entering, buying. However, having that strong reaction makes me really stop doing this. This was Tesla, and this actually was our view in relation to markets in on Friday today. And if you really feel that report have helped you, please give us thumbs up and shoot us with comments down below if you have any question or you would like us to answer any or change any issue in relation to the videos. The videos were very long. Now we try to condense them to make them easy to comprehend. However, the amount of information is huge and we want you seriously to understand the thinking process behind picking stocks or picking markets to trade. We don't want just to give you a list of support and resistance without explaining why do we do this. If you want to know more about trend following formula and how do we use that technique, please click on the description down below. We have a free course for you explaining everything about trading in the direction of the trend. Wish you all the best and have a great trading day.